Before we jump into today's trade breakdown video that made me 52 points, or also known as $1,000 on the Nasdaq, I just want to lay a couple foundational points for you guys. Number one, I am doing this video series, so welcome to the very first video of this series where we are going to get 150,000 in funding from Apex Trader. I'm not doing this series just to showcase to you what it means to get funded or get funding for the first time. I'm actually doing this for myself to basically create a layer of accountability or really a layer of discipline, because I am kind of shifting up my trading style from being a scalper style trader to more intraday trading. I've kind of finally put together a strategy that's working for me, just using a blend of different concepts or different indicators that really made sense to me, and then I applied that to my strategy, and then that's what I came up with. It's something that I like to call the millionaire move model. There is basically four major confluences that we're looking for. The first confluence being like an impulse move in either direction. In today's trade breakdown, you'll see that the impulse move happened to the downside. The second thing that we're looking at, did a trend line get broken? If a trend line got broken, then the next thing we'll be looking for, which is confluence number three, is some sort of market structure shift. So in whatever direction that impulse moved happen, did it not necessarily impulse back the other way, but did we have some sort of market structure shift? And I'll show you exactly what I'm talking about in today's trade. And then the fourth thing being, did we have some sort of candlestick or candle wick pattern that showed up that gave me the confidence that I needed in order to take the trade? So along with the journey, along with the documentation of getting the 150,000 in funding, I'm not just going to be a degenerate and load 10 contracts on the account and then try to pass it all in one day or all in one trade. This is just something that I'm going to really let the compound effect do its thing. I'm just focused on really just taking one trade a day on the account with either 1 to 2 contracts, depending on my confidence. If my trade setup does not happen, then I'm just simply going to wait till the next day and see what happens. So I'm not exactly sure how many parts will be in this series, but just know there are more videos to come. So let's go ahead and jump into the chart so I can show you exactly what it was that I was looking at on Nasdaq whenever my trade setup happened. So we'll see you over there. Okay, so here we are. We're actually on the 1 minute chart on the Nasdaq. If you have a strategy that you love and you find bits and pieces that out of this video that works for you, then that is amazing. Make sure you just don't get lost in the sauce, because that's all trading is all about, is just not getting lost in the sauce, keeping things simple. Do not have a million quadrillion indicators on your screen, boxes, all of that kind of thing. The one thing that I figured out really fast with having a million indicators is that it made me a lot more emotional than what a blank chart did. And I can kind of just realistically, a blank chart kind of like helps me get more in tune with the market and trying to, read the stories of the candlesticks and the candle wicks to figure out where price could potentially go. None of us knows where price is going to head to, or where price is going to stop and reverse off of. It's just all about really just getting in tune with the market, reading the market. The market tells you exactly what it's going to do. You just have to be able to try to understand what it's telling you. And so that's what I've kind of been able to figure out, is just having a decent understanding of where the market could potentially go. I would say kind of moving into this trade, I started out about 70%, and then from there it quickly grew until I reached the point of hitting buy bid, which entered me one contract and took me up 52 points. So let's go ahead and go over that. Okay, so what we're going to do is we're actually going to go back and just do a bar replay. I think it's the simplest way just to kind of show you what I was seeing. And I'm going to go basically to the start of the New York session. So we're basically a minute off. Boom, here is the opening candle of the session. I never know which button is going to be the best one. Let's just go 1 second right there. And what I'm going to do is basically, as things are happening, I'll either stop it or we'll just talk about whenever I get down to here about what I was seeing. So we're going ahead and hit play. Boom. Hopefully this doesn't move too fast. Let's see here. Still headed down, still headed down. Keep going. All right, I'm about to talk about something. All right, boom. I want to pause there. So I'm not FOMOing in any of this price action. I try not to trade the first 30 minutes that the market's open, and I just want the market really just to kind of set, set the market structure for me, not me set the market structure. So we realistically just have to play on what it is that we're seeing. So right off the open, big sell-off, about 15 minutes in, 10 minutes into the market, we had a push back up and then a major sell-off again. So what this does for me, this just lets me know that now this is a new lower high, and that is how my trend line was started. Boom, we have point 1 and then point 2, and then we have the market structure continuation broken here right around 52625. And then market just continued to sell down. So let's go ahead and hit play and let this keep playing out. So we had a massive sell-off, finally had a little bit of a retest, massive sell-off again, back up into the retest, tested back over the trend line. This is where we're stopping. Okay, boom. I want to stop here again. So not FOMOing through all of this. You just have to kind of continue to let the move happen. And then what we're looking for is a market structure shift anywhere to be found. For me, these are kind of equal tops, so that doesn't really equal a market structure shift to me, especially even though on the equal top that we have a doji candle whenever it closed. So basically, in order to confirm a market structure shift, I basically want to see the candle close after the last previous high for me to have any sort of confidence in that market structure shift. But really, all this did was print another another higher low, and then continued to sell off. It printed a sell-off pattern here. So doji with a massive engulfing bearish candle, and then we're headed off to the races. And then as you can see here, we're setting up to have the market structure continuation, which is just bearish market structure heading down. So I'm going to go ahead and continue. So boom, had a big push down, big push back up into the trend line. Okay, continuation pattern back down. Nothing really happening yet. Okay, I want to pause there. Oh, nope. Let's see. Okay, that'll be fine. So we had, a little tweezer top here at the trend line, big sell-off down. And then the biggest question that you guys will probably ask, like, well, how did you know that price was going to stop here? Obviously, I didn't. Because I have literally no market structure box drawn up. I have an idea. Let me go to a higher time frame because it'll be easier to see. So I have an idea that market structure might bounce off of this area or somewhere off of this area. I mean, you can draw up boxes for days and price is going to hit that box every day. And then every once in a while, price will reject off of the box that you marked up 15 boxes later. So it really is just, it is what it is. You just have to follow the order flow coming in and out of the market and just continuing to go from there. So I'm not saying I was like a master guru and I freaking like wicked the box that this was stopping out and going back up. That was not the case. I was just going to let this thing ride down until we had a true break of structure with a break of this trend line. The way that it played out, confluence 2 and 3 lined up together. So the trend line was broken. While I was waiting for trend line to be confirmed that it was broken, we had a market structure shift with the yellow line and a closure above market structure shift. To me, having those two confluences blend together like that gives me a lot more confidence. So moving from this setup, like I said, I was about 70% moving into this setup. Now this jumps me up to about an 80 to 82% confluence. So now the fourth confluence that we're looking for is actually a higher low. So the opposite structure way now. So we had the bearish structure. Now we want to see some bullish structure being put in. And the way, from what I've been able to determine the best way possible, is just look for, in this very case right here, just look for a lower high to be put in, and that's going to tell you that order flow is changing in the market, or has a likelihood to change in the market. I'm not going to say it does change, but it has a likelihood that it will change. So that's what we're looking for. So the next couple things that I'm looking at is, wait for this, boom. All right, I just want to pause that there, even though the trade is already entered and in. I like these 3 little candlestick patterns here where you just see more wicks than you do bodies. That lets me know that price came down into this level, and then we moved away from the level. Price came down into the level, we moved away from the level. Price came down into the level, we're moving away from the level. To me, that's just saying that orders are slowing down here. There's more buyers than bearish bearish. There's more buyers than there are bearish buyers. So now we're jumping in. And there was actually a fifth confluence that lined up, and it was this right here. You have a shoulder, you have a head, and then you have a second shoulder. So we have an inverse head and shoulders, and so that's what gave me that additional percentage in confidence to go ahead and enter this trade with basically my stop loss right underneath market structure here. Because in my opinion, if market structure breaks at this point, this will just kind of continue to flush back down to the downside, and I don't want to be stuck in that trade. So that's why I decided to put the stop loss there. And really, just let this thing do its work. So there we go. Boom, we're out of the trade there. 50 points in about 3 minutes. And this resulted from just, what would this be? This resulted from basically 40 minutes of waiting. So 40 minutes for me to wait, not FOMO through any of this price action, to let my setup actually set up, and then to take it in 3 minutes later and make $1,000. I think that says a lot about a trader, in just the way that we have patience with this trade, because more times than not, trades like this have paid me a lot more than just scalping the market like a degenerate. And this was a lot less pressure because I actually had a plan moving into this trade. So if I could tell you one thing, it's don't get lost in the sauce. Keep your trading strategy simple. Every strategy works. There's not one strategy that's better than the other. It's about what it is that you understand, what you can apply to your trading strategy, and what you can wait for on a daily basis in order to make these trades happen. So there's not a lot to it. That's about it. So if you guys have stayed up to this point, I just want to say thank you. I appreciate your time more than anything. And I look forward to continuing to document this series, where I add an additional 150,000 to my current 250K funding that I have through Apex and Top Step, just trading 1 to 2 contracts at a time, and just showing you guys what low stress trading environment could look like for you. So I'll catch you guys in the next video. Until then, I'll see you guys next time.